UK Prime Minister Liz Truss were given the benefit of the doubt when she announced her economic plan that included tax cuts and other growth promotion measures. But she quickly lost support when it was discovered that these plans were not properly funded. Apart from that, the pound slumped to all-time lows and stock markets fell. Last week, UK pension funds were selling treasury bonds, and all it eventually pushed her to the borderline of being ousted. If she were to have resigned, she would have been the Prime Minister with the shortest tenure in office in UK history, and with a shelf life as long as broccoli. How did the market sell-off happen last week? The following was the sequences of events. The chaos started following Finance Minister Kwasi Kwarteng's mini-budget announcement. Financial institutions initially welcomed these policies as they were the biggest beneficiaries of what is seen as a pro-growth agenda. The policies focused on tax cuts and deregulation across the financial sector. But they soon found out that the Chancellor has failed to fund those reforms, and the market reacted with fear. Sterling tumbled, UK government bond prices also plunged. The chain effect not only occurred on the consumer side with mortgage rates going up and borrowing costs increasing, but the pension markets also had its own crisis fermenting. The problem centered on the use of financial products offered by investment banks to pension funds that are trying to hedge risks. Those products, known as liability-driven investing or LDIS, required asset as collateral to offset risks. The unexpected fall of asset prices after the announcement of the mini-budget, including UK government bonds, caused the pension funds to fall short of collateral as required by investment banks. This resulted in a sell-off of assets to make up the position required. And the Bank of England had to inject £65 billion to stabilize the market and prevent the crisis from further spreading across the city. Tax cuts worked previously during Ronald Reagan and Margaret Thatcher's terms when the world was in a similar crisis as it is facing today. But this time, tax cuts might not work, and if not properly handled, a bigger crisis might happen. Our banking system has a much stronger balance sheet compared to 2008, but that doesn't mean we can be less on guard. Over the past several years, the UK has been inconsistent with its policies both domestically and internationally. Whether flip-flops including Brexit, sanctions against Russia, and blocking China's 5G technology have caused not only its own economic development, but also impacted its relationship with other countries. While UK's new finance minister just scrapped almost all the planned tax cuts, Truss should also seriously consider her next steps.